cotton harvest is progressing as well, with 57% of that crop now out of the ground, 2% ahead of normal. Michelle Rook is back with a cotton outlook with John Payne in Markets Now.
Welcome to Markets Now. John Payne with Hedge Point Global Markets is joining us. John, let's talk about the cotton market because, despite the fact that we have a smaller crop in the U.S., we've really not been able to rally this market. Is it a supply situation or demand that's holding that market back?
I think it's a demand situation. I think near-term supplies are kind of piling up. We're seeing certified stocks grow, not the carry-out, but the certified stocks that are accumulated at delivery points by some of the bigger, wholesalers. They're not seeing demand from the global markets, wanting to come and take it off their hands at this price. So given interest rates, I think folks are selling the carry, looking at selling May and potentially even the July contracts, just based off the idea that, global markets are still pretty weak when it comes to, consumer spending and the need for clothing. So, I think near term, there's just a lot of difficulty to get a story that's going to get the market to move. We've had a problem here in the U.S. I don't think the crop by any means is perfect, and I think the carryout is somewhat low relative to the last few years. But we've had big crops come out of Australia and Brazil that will kind of suffice right now. And the fact of the matter is, these buyers are coming from developing countries with weak currencies, and they would rather not play in the USD. They'd rather buy something based off the Brazilian real or the Aussie dollar, and then not have to factor that in.
Yeah, John, we're going to essentially stay stuck in this sideways range. Is there anything that can pop us out of that in cotton?
Maybe a big bazooka trade, quantitative easing out of China, to get that market to really loosen up. Maybe interest rates coming off here in the U.S. too. We've seen the back end of the yield curve really move this week. And, I think the U.S. is somewhat fine. Consumer spending is good, but we do worry a little bit about a yield curve inversion and a recession coming now, just from a consumer spending part. So I think short term here, that cotton market does not have the the foibles to get the market to move like it does in soybeans or even corn. So I think at this point, we want to see what the acreage is next year. Potentially, if you want to own corn or cotton, rather, it might be the better play. Go out to the D's 24, maybe even the D's 25, and put some length there.
I was going to say, does this discourage farmers from planting cotton in 24?
Yes, it does. I would be, given the cost of capital and the cost to grow this stuff. Plant beans. It's such an easier crop, and I think you're going to see folks do that next year.
Thanks for joining us, John Payne with Hedge Point Global Markets. That's Markets Now. We'll have more AgDay coming up.
To find John's newsletter, This Week in Grain and Oilseeds, head over to www.thisweekingrain.com.